The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome, everyone, to another excellent edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host who loves to come to you at this time.
The following takes place between 2 p.m. and 3 p.m.
Well, that sounded weird. Anyway, interesting day. We're up to 27.29, something like that on the S&P cash. 3,064 and change. Dow's up 170. NASDAQ's up 85 after being down earlier in the day. The Russell, weak sister today, down 0.4% after the huge move higher. Crude 33.94 as things start to get back to, I guess, as normal as they can be. Maybe that's the best way to describe it. People say the new normal, but I don't like that sound. I don't like that. Doesn't sound good, the new normal. Maybe it's been overused. Anyway, as we check in during the show every time, we always like to see if there's a lot of volume or not. We had a lot of volume yesterday. Volume picked up 2 billion shares over Tuesday. The short volume went to, I think, the high of this year yesterday, about almost 2.5 billion shares sold short yesterday. Generally, that's a good indication that the shorts are not giving up on the equities. They're going to pile in as much as they can at the highs. I've got some good questions about what I'm looking for, and we'll talk about that in about the fourth segment. But what am I looking for a high in this market? And I will tell you that it's not little signals after a big run like this. You will absolutely know that a high is in. Most people won't wait for it. Most people will short and short and short, and when the opportunity actually arises to be short, they won't be able to pull the trigger. That's generally the way it works. And I'm not exactly sure if it's the big men of the street just going, we're just going to keep pushing the stock up until everybody quits shorting and we can run them out. But I almost think that that's it. Can't prove it. But when everybody gives up, can't pull the trigger, I think a lot of people on Wall Street go, well, that's it. We can't just continue to push the market up, have people short, and then have to buy it tomorrow, next day, next week at a much higher price. I think could it be that? Could it be that simple? All I know is that more people short, generally the market goes higher, and generally there is a huge, fireworks-like end to those things that normally end in gaps higher and no volume. Because, of course, at that point, everybody is so despondent about trying to short the market that they can't pull the trigger the last time when they really need to. So it's not uncommon. But generally the big ones, and there's nothing so far in there that tells me that's happened so far. Now, what else is we got? Of course, Tim Ord is back on with us today. He sent us lots of charts, so we'll go through them in the next segment. We got a little bit of history to do. Why don't we go ahead and do that as we wait for Tim Ord to come on.
That it's all just a little bit of history repeating.
It is nothing but history repeating on this day in 1937. The government of Germany, a country, then under the far leftist control of Adolf Hitler, he was a National Socialist, I tell you what, communists, if anything that communists hate worse than a capitalist is another country that's communist. Anyway, that's why them and Russia got along so well. The party forms a new state-owned automobile company, then known as something, and I can't remember my high school German. Deutschen Volkswagens. Later that year, it was renamed to simply Volkswagener Werks, or the People's Car. In 1959, the advertising agency of Doyle, Dane, and Bernbach, I guess that's what it is, launched a landmark campaign. After the first year and a half, sold only like 1,000 cars. They renamed it the Beetle. They painted Beetle stuff on it. They made it cute. Women and some guys, mostly those into the chronic, decided that was the thing to buy and spend its diminutive size as a distinct advantage to consumers. Over the next several years, the VW became top-selling auto import in the United States. And, of course, for me, the entire thing was worth it. For that one centerfold layout in National Lampoon magazine, where they took the Beetle ad that had the Beetle floating in a pool, and the ad touted that it was watertight. It's so watertight that it would float, not sink. And of course, they ripped off all the titles and everything off of it, and put on there, if Kennedy drove a Volkswagen, he'd be president today. That was, in fact, if that was, sometimes jokes takes years, millions of dollars to come up with, but all we can think of is Mr. Chappaquiddick. But for me, never had a VW, never wanted one, but I probably would have bought one just to get that National Lampoon layout. If Kennedy drove a VW, he'd be president today. Anyway, on 1937, that started. 22 million of the original Volkswagen Beetles were made. The last one rolled off the assembly line in 2003 in Mexico City. But that was about it. What else do we get? We'll take a quick look here with about a minute to go. Got lots of Tim Ord's charts here, so we'll be taking a look at here. Still up 26 points on the S&P cash, 155 on the Dow, up 78 on the NASDAQ. Quick question, do I see anything happening in gold? It just looks to me like it wants to go back lower to about that 1690. I think it's made a low. It's just going to probably retest it a couple of times there. And, it's kind of fallen off the cliff. It was up, 1722 earlier, now down to 1711 or so. We'll be back in a minute with Tim Ord.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
And we're going to go to the phone lines where we have Tim Ord warming up in the bullpen. Tim has had a newsletter for over 30 years, always on the top of the Timer Digest list. You can catch him at ord-oracle.com. And we welcome Tim Ord back after an extended vacation. How you doing today, Tim?
Good, Dave. How you doing?
Great.
Actually, did you get my charts?
I do, and we're showing them right now.
Okay, we can take a quick look at them if you want.
Go right ahead.
All right, this is kind of an unusual chart. Maybe I showed it last time, but what it is the weekly inflation-deflation ratio. And the top window is a weekly RSI for the inflation-deflation ratio. So it measures the velocity and decline of that ratio. And it works well on a weekly time frame. And what I did, every time the RSI of the weekly inflation-deflation ratio got above 70, you had a short-term top. And all those red lines are when that happened. And last week, I think it was last week or the week before, it might have been 2 weeks ago, it got way above 70, and we sold out our long position on the gold market. I'm kind of just waiting here. I'm not bearish, but the market went up too fast, too quick. But if you notice, when the RSI gets above 70, that's not the final high. It always goes back up. This chart goes back to 2001, and it always goes back up and makes a higher high. Then that consolidation can last a while, maybe a month or two or three. So what I'm thinking is we may pull back here, maybe another week or so. Nothing real significant. Possibly get back to support. I got XAU in the mid or at the lower window there. And we may get back to maybe 110 range or something like that. And I'll probably find support and start going up again. And most likely the RSI next time up may not hit 70, or if it does, it'd be great, but that might be a longer-term top. So a mild consolidation here, the next rally up could be the one that could last maybe possibly several months. So that's the reason I pointed out, circled in blue on the XAU chart. Every time the first RSI hit 70, it went up to a higher high each time, and we're expecting that here. Then the next consolidation was more took a lot more time. So maybe June, July we hit a high, then we consolidate into maybe probably October or something. So I want to point that out in chart 1. So,
yeah, I got a question for you on the XAU and all that.
All right.
To you, it was the huge move quickly, not so much the volume. It was. I know we've talked about probably 10, 15 years ago. I always called it your Goldilocks theory on volume, which is too little volume, just right, too much, right? Too much and you get an exhaust move and it goes. If you have maybe double the volume, you break a new high, that's pretty good. You got half the volume, watch out, it's probably a false breakout. So how do you put those two together for volume and something like this that really looks just like a spike?
Right. You get bottom spikes, either going up or even going down. If you get, it's at least, I usually use a rule at least 50%. A lot of times, the volume also jumps like 100% from its previous, 5 days or something average. Normally, that's whatever it's doing, it'll just kill the market. Not 100% of the time, but probably 90% of the time. So it's something not to become too unnoticed, I guess. So, but I use kind of 50% rule. If the volume jumps 50% from the average 5 days before it, normally you're going to expect something other than straight up or straight down. It usually leads at least to some sort of a consolidation. Are you talking about that method, you mean?
Yeah, a little bit about that. There were just a couple things that came back to me. The other one was, and I don't think it really applies here, was that if a price hangs out at the high long enough, it's just going to jump the creek. So if it's going sideways long enough and it's been a push higher, I always kind of remember you talking about that. But
right. Yeah, if you're not, for instance, you go up to a previous high, and the market just basically does not have price rejection. In other words, it doesn't go up and fire right back down. But if it just sets up there, 3, 4, 5 days, it's going to eat through that high and go up higher. But yeah, we're having a lot of that, like in the S&Ps and stuff. I noticed if it goes up to a previous high and just sits there, it's going to work through it.
Yeah, I was just bringing it up because occasionally people have questions about volume, and I'm kind of a big Wyckoff style trader. And if you're looking for something that's just kind of the theory on reading volume, you might want to check out The Secret Science of Price and Volume. I'm holding up your book right now here so they can see it.
Well,
anyway, just thought I'd give you a plug there. They can get it on Amazon. But enjoyed that book a lot. A lot of people talk about price and volume, and I think they kind of think of it as a kind of a light switch from 5 minutes ago to now, and volume really kind of more of a thing that takes a little bit to develop. It's more like a Polaroid instead of a picture on your camera phone that you see instantly. You kind of have to wave it back and forth a little bit, give it a little time to develop.
Right. Good point.
So anyway, do you want to go to this second chart? We got about a minute before we go to break.
Yeah, the second chart is this is kind of a long-term chart. Kind of tells you where we are. This is back to the gold market pretty much. The top window is I think these are all in daily charts. Anyhow, the top one is a Bollinger Band, and it's been pinching. This chart goes back to approximately 2010, and what I want to point out is what's going on here. I think this might be a weekly chart. Don't see but anyhow, the Bollinger Bands have been basically going sideways since about 2016, and we're finally just turning up on the long term. And we had really a narrow range going over the last several years, and we're finally getting some volatility. So I expect this volatility to continue probably for several more years yet. And if you notice, the Bollinger Bands are starting to turn up finally after 3-4 years going sideways. So that bodes well for the gold market stocks.
Okay. We're going to be going to break here. We'll come back. We got more to talk about with Tim Ord of the ord-oracle.com. Of course, his book, The Secret Science of Price and Volume. If you're looking for something on volume, probably the definitive work on that. We'll be back in a minute.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're back with Tim Ord of the ord-oracle.com. And we're looking at a gold chart number 2. If anybody wants these charts, if you email me at path@tfnn.com, I'll be glad to send them via email to you here today. Okay, so we're looking at the top part of chart 2, which is these Bollinger Bands that are starting to pinch up onto the top side, actually a bit over the top of it.
Yeah.
Continue.
Yeah, this is a longer-term chart. It kind of gives you a picture of what's happening longer term. And, you know, the top chart's the GDX, and it's making, you know, it's bending the chart up and suggesting, you know, the trend now is up. The next one below that is the GDX-GLD ratio. And ideally, you want that ratio rising when gold stocks, or for instance, GDX is an ETF for gold index, and GLD, which is an ETF for gold. Normally, when gold stocks are outperforming gold, that's a bullish occurrence. So you want that ratio to turn up. When it's going down, usually that's a bearish situation. And if you look back in like 2011, went down and all the way into 2015, 16, then went up for a while, then went sideways here since 2016, and now it's above the midline and it's starting to turn up also. And you notice it's been real narrow over the last several years. We think that Bollinger Band will start to expand now as more volatility to the upside will increase and widen those Bollinger Bands. So, yeah, the gold stocks have really just been super dead over the last 4 or 5 years. And before that, 2011, they're downright straight down. Most of them just, you know, went down probably 90% from their highs. Then from the last 5 years, they didn't do anything, neither went up nor went down. And this consolidation that's been going on over the last 5 years, we think volatility will be coming back into this market, and it'll be, we think, could be one of the leading sectors over the next several years. I'll put it that way. So anyhow, the GDX-GLD ratio, it's just barely turning up, so it's in early stages, but we think that turn up will increase as time moves forward.
So
the one below that, which is GDX, it says GDX ADP. What that is advanced decline percent. And that pretty much measures the strength of the gold stocks internally. So if you notice, that's been going up since about 2019, showing that advanced decline in general is getting a lot stronger. Even price hasn't moved a lot. The advanced decline has, in other words, there's a lot more advancing issues, declining issues, and it's showing a lot of strength, and Bollinger Bands have expanded, and mid-Bollinger Band has turned up. So internally, the strength is there to make GDX go higher. Matter of fact, it's outperforming pretty much GDX. The bottom one is the up-down volume percent for the gold stocks, and it has too been going up since 2019. Not as strong as advanced decline, but it's starting to turn the Bollinger Bands, back up, and so long term, this bodes pretty well. So this sector is probably, it's in the early stages yet, but probably a year from now, we'll see a lot more big turn up in the Bollinger Bands expanding on all these indexes. So
since we're talking about Bollinger Bands, and I don't talk about them a lot, why don't you tell everybody what they are and how you use them and why it's important here?
Well, I don't know what the exact formula is. What it is, basically, when Bollinger Bands contract when the market's going sideways, and it's used as a moving average, and it's a deviation from the highs and lows. And I think the Bollinger Band middle one is just a 20-day moving average. Then the upper band is some derivative of that, and the lower band is some derivative of that. But if the market's hanging around the 20-day average, and the Bollinger Bands are going to stay narrow. And so it stays narrow for so long, and the longer, what you have in a market, either the market's going up, it's going down, or it's going sideways. And that's what the market does. And you want to find a period that's basically been consolidating for a while, because once the market consolidates, and then right after that consolidation, you're going to get an impulse wave. It can be either up or down. But if the mid-Bollinger Band turns up, then implies the impulse wave will be up. And that's the reason why it's important to watch. If the Bollinger Band's been going sideways, an impulse wave is going to come out of that. And impulse waves where basically most money is made.
And what is an impulse wave?
Pardon?
And what is an impulse wave?
Well, an impulse wave is, it's a impulse wave up is a rally phase where the market basically makes higher highs and higher lows, and it works itself up. Matter of fact, we have an impulse wave on the S&Ps from the February high down into the March 23rd low. That was an impulse wave down. The market virtually, I think, dropped 30% or better. So then from that March 23rd low, we had an impulse wave up because the market was making higher highs and higher lows. So those are impulse waves where the market goes sideways, and it's just making what is happening is just making it matching its previous highs and going back down, matching its previous lows. Well, that's just a trading range. So, but ultimately, the longer the trading range, what that is building energy for the next move. So if market's been going sideways, what it's doing is building energy for the next impulse wave. And so the longer the energy is built, the longer that wave will last, the impulse wave will last. So this sideways consolidation in the XAU has been going sideways like 4 or 5 years. That implies it's built a lot of energy for the next impulse wave. Well, in our opinion, there's a lot of evidence that we have that the impulse wave will be up. So even though this market hasn't done very much for 3, 4, 5 years, the next 3, 4, 5 years could be rewarding as the market is probably switching its sectors. This once big bull market in the tech sector has been going on. It's probably died or is dying, and that money is going to go somewhere. And then we think one sector is going to go into is probably the gold market, and it could be the marijuana market too. I don't know. That's been a kind of bear market, but that didn't really go sideways. That just went down. But
we hope the profits in that don't go up in smoke. I want to thank Tim Ord from the ord-oracle.com for being on today. Again, if you want any of the charts we talked about, just email me at path@tfnn.com. Of course, this book, The Secret Science of Price and Volume. I want to thank you for being on the air today. We'll have you back in a couple more weeks, and have a good weekend.
All right. Thank you.
Bye.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get the competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com. Educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
And we get back to the market. Already in progress. We're up 24 points on the S&P cash. Dow's up, let's call it 112. NASDAQ still up 66, 67. Yeah, 66, 67. So kind of just the kind of a quiet time. I think a lot of people are getting ready to get on a side or a position for CRM. Salesforce out after the bell was up fairly strongly during the day. Come on, there we go. It does have a nice Gartley pattern out here, which is interesting. The Gartley leg over here on the from the C to D is not generally the kind of juice you'd want, but of course these guys have a history of kind of coming out with volume on earnings. I would always point to the fact that it's got a giant cheerleader in the form of Jim Cramer.
Bring me the head of the false prophet, Jim Cramer.
All right, I can't play that enough, can I? Anyway, Salesforce has a kind of a history of sneaking in big earnings and popping out. 195.72 is last high. We got to 184.80 today. These companies have been doing very well. Now, is it all in? It could be, but you got a absolute mountain of people that shorted around 175. So anything under that, you're probably going to see those guys who have been on the wrong side sweating bullets all day long, deciding they want to pick that up. You'd have to have a really disastrous earnings call, which I don't think you're going to get. Most of the people that were in this kind of sector in web services did extremely well. And, of course, that was on everybody going to remotes and getting everybody ready to be able to work from home. Probably not as good as some of the other companies. Maybe 3/4 is good, 80% is good. Somebody like Microsoft. So it's kind of hard to write in a really bad report card for them. Even if they probably don't do very well, my guess is that Cramer will go to the whip on this when he's on his show, and he's almost always on the show right after earnings or the next morning with him at 9 o'clock, again, going to the whip for that horse. We're going to go to Scott in Denver. How you doing today, Scott?
Doing great, David. How are you?
Another day in paradise.
Right on. Hey, I see a big volume day in a chart, and I'm wondering, what does that tell you? And I was actually looking at AMC and the big volume day. You'll see it there on May 11.
Yep. That was when everybody that was short that should have gotten out was forced to get out. At the end of my show, I always say, sell when you can, not when you have to. Well, when you're short, when you're short, you should cover when you can after something's blown apart and not wait for it to go back higher. You have far too many people waiting for companies to go from $1.90 to zero. If you're short at $7, let's say you did it perfectly, short $7.50 at AMC, and you got down to $195. You're just a pig. You don't deserve that money if you didn't take a lot of that off. And unfortunately, everybody's so sure that everything's going to go out of business. And, the history is much more like Kmart and Sears and a variety of other companies. Man, they hang on like a 5-year-old's tooth. Unless you rip the thing out, it's going to dangle there for a week or two. And in the case of a lot of these companies, they have lawyers that help them drag it out for forever because those CEOs are still making a hefty paycheck. So generally the people that all lose are the shareholders and bondholders. Is AMC probably going belly up? The answer is yes. But again, you don't want to be short when everybody else is short, because guess what? A stock operator will come around and he'll find out some kind of bovine excrement story about how they finally found a huge buyer in the thing or financing. I don't know. You remember Tesla when he said financing secured, and the stock went from what, 280 to 420? That is the problem. Yeah. That is the problem when you get into one of these stocks and you got a stock operator on the other side of it. I think, if I remember right, that was one of those stories, right, where someone was going to buy the thing. Wasn't it Amazon was going to buy them all, and it was a phony story? I think that's what, if I remember that day, I think that's what it was. Okay. So was it people buying it because they thought Amazon was going to buy it? Yeah, maybe a handful of people. But my guess is it was probably a lot of people running for the hills because they thought that, hey, wherever they shorted it, this thing's going to zero. Everybody was selling the pandemic as something that would be over in 2 or 5 years, not over in the summertime. And, that's why I don't short stocks generally below $30. It's too easy. And again, all you got to do is start a rumor. This one was, I think that Amazon was buying it so they could show movies in the theaters so that they could get them on for the Academy Awards. And it sounds like a perfect story. It's very plausible. Amazon said it was never true. So what do you say? That is why you don't want to be short cheap stocks, because there's so much money to be made for sharp stock operators out here that can just run you ragged. Now, I don't know what you're thinking about this, but again, eventually they're probably broke. Right? If they're not broke now, they're going to go broke. The only thing that keeps them up is everybody keeps shorting them, and then other people keep running them. And stocks can do that for a long time. They're not a instant reality check on the financial statement of the company.
Okay. So just curious, on any kind of a chart, if you see a big volume day, is that resistance or is that support? How do you look at that on a chart? I mean, what do you see?
Generally, big volume is where a lot of people are on the wrong side of the market, right? And in this case, everybody wanted to get in on this and run the stock up, but it basically opened at the highs. And the story kind of smelled during the day. But the whole point of it was to run shorts out. So I don't see it as support and resistance so much as a bunch of foolish people that were short a $5 stock just asking to get their clocks cleaned. So I would look at a deeper context in this. Generally, it's the bigger companies where support and resistance actually comes in. Thank
you very much, David.
When you're fooling around with these companies, man, you got to know everything about what's going on and hope you don't get that press release, or in this case, the phony story. Haven't been bought by Amazon yet. We'll be back in a minute.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Yeah, we got Tom O'Brien after this, and of course after him we've got Basil Chapman with his webinar. So we got a lot of stuff going on here yet before the end of the day. Question is shorting this morning heavy again. Not so much in the morning, but in the afternoon it started to pick up here over the last 2 hours. My guess is that the real action will happen tomorrow, and that is after Salesforce's earnings numbers tonight. A lot of people are looking forward and through that. But you know what? A lot of these earnings were actually fairly good. So it's kind of tough to actually say that we're expecting nothing but disaster going ahead. Now, a lot of the stocks are doing bad. I agree that the airline stocks are nutty. And maybe some people that will soon be separated from their money is probably coming in those airline stocks. Again, I don't like being in any company that is hemorrhaging cash, like a jugular was cut, not a jugular, but a jugular, L-A-R. So what I'm looking for, and generally happens in these kind of markets, is that you get a huge gap higher, and that gap fails. And we've got some gaps, but there's not much in there. My guess is that a lot of these stocks that are highly shorted are going to see a huge move. Now, when that move fails and closes on the same day, that's it. If you got a $50 stock and it's shorted out the yin-yang, volume not much, it pops up, let's say 10%, goes for 50, 55, $60, 66, $67 that day. No volume, first couple hours of the day, then it starts to roll. That's a good indication that you've hit highs in markets that are acting like they are today. Generally, they just don't slide over during the middle of the day. You need a big gap, and you need that gap filled, and it is scary, so scary that the shorts can't pull the trigger. We'll see you tomorrow. Same bat channel, same bat time.